Hello, everybody, and welcome to another episode of the Capital Gains Tax Solutions podcast, where we believe most high net worth individuals and their professional teams struggle to find great capital gains tax deferral options. Not having a clear plan is the enemy. Using proven tax deferral strategies such as the Deferred Sales Trust is the best way to exit highly appreciated assets tax deferred so you can create, preserve, and grow your wealth. As always, we're streaming on expertcresecrets.com and the Capital Gains Tax Solutions YouTube channel. So please rate, review, subscribe, and hit that thumbs up and the bell and the notification button. All that stuff for the interwebs. It really helps us out. We really appreciate it. Thank you so much. Super excited about our next guest. He's been a capital raiser and broker for the last 5 years, raising for all sorts of different asset classes. We're going to dive into a whole bunch of different stuff around the capital raising markets and how they're going right now. And so please welcome Brad Shepard. Brad, how you doing, man?
Doing fantastic. Thank you very much. Thanks for having me.
Yeah, absolutely, Brad. So tell me a little bit about how you got to where you are today.
So yeah, I've been in real estate for a good 20 years. Actually, I went to college with the idea I wanted to get into commercial real estate. It took a kind of a winding path, but I've done pretty much everything you can do in real estate other than owning farmland. I guess that's one thing left for me to do. Started doing with rental properties like many people do. We have developed hotels and other hospitality elements, retail and cafe shops that we developed and then operated for a while. Started doing vacation rentals before Airbnb was even a platform. And then about 5-6 years ago, I was after doing a few years focused on more aggressive, active real estate like fix and flips and wholesaling and whatnot. It dawned on me that it was time to get back to commercial. And that's where I wanted to go. So I started looking at this space with the idea of sourcing my own deals. So I was talking to the commercial brokers, looking at putting together a team that could help be an operator group. And along that path, was able to connect with some folks who had deals, needed capital. And with my background, I knew I could supply capital. That was an area I felt like I was confident in, and so connected with some groups there. This was primarily happening in Austin, Texas, where I used to live up until about a year ago, and from there connected with a capital raising group who, and then some various operators based out of Texas that we started working with, and kind of married our skills together, and it's gone really well. Started doing just kind of how many people do with really kind of loose, structured around the relationships with the operators. And right before COVID hit, decided we were going to go a different path to make sure we could be really above the board, making sure we're doing everything by the book. And so went and got us a couple of securities licenses to become a broker dealer rep, so that I can then go out to the market with really clear, a real clear picture on who I am, what my incentives are, and how we can structure our relationship with the operators as well. So that's what I've been focused on for the last 5 years exclusively is capital raising within this market, but coming from it with a couple decades experience with all sorts of active real estate investment.
Awesome. So you mentioned you married some skills together. What are one or two strengths or spiritual gifts that you have that have led you to be successful?
I'm not a slick guy. I'm not the most charismatic guy in the room by any means. I just try to be really genuine, and I don't even try. It's just how I operate. I want to do good by the people I work with. I come at it from a sincere drive to do well for the operators and do well for the investors that I'm working with. And that turns out to do really well for my family. Just having, the core of what I'm trying to do is to provide a really good, meaningful living, a really good, meaningful experience for my family, my young kids. I've got a 3-year-old and a 6-year-old, and I want to be able to take them out and, and play with them and be home with them. And so it's been a great opportunity to focus on this avenue that provides that for me. And in working with the operators, they know we're going to do what we say we're going to do. In working with the investors, I think I come across as really sincere, and that I've got their best interests at heart. And so when I can match those two together and get compensated for doing so, I feel like it's a triple win.
Yeah, absolutely. And if you're actually coming from a place of genuine care for other people, it definitely, flows out of you. So that's awesome.
Yeah.
So tell me a little bit about how you guys currently operate. What's the number one secret to capital raising?
It's interesting, especially right now as the markets have shifted. The number one secret, I suppose, would be performing well for the current investors opens their willingness to introduce us to their friends and their associates. And so it is a lot of word of mouth. We're not out there doing Facebook ads and Google ads. It really is word of mouth type of operation. And as you do well for one individual who is, they're successful at what they do, whether they're professional services, lawyers, doctors, small business owners, etc., they know other people like them. So as we do well for them, they're telling their friends and their network. And that's primarily how we grow our business. And then because that's my exclusive focus, I'm growing my investor database, and then I can take that and put that to use for an operator who, they're trying to get their second, third, or fourth deal done. We're tackling generally 150 unit, 200, 300, 400 unit type properties.
Right.
And that operator might be at a point where they're maxed out with their friends and family list. And so then we can bring our investor database to them. And that's all I focus on is making sure these investors are happy. Again, it ends up being a really nice, powerful arrangement.
What happens when they aren't happy? Like, what happens when a deal goes south? How do you manage that?
So, I've been fortunate in that the deals that I've raised capital for, they've gone well. And it's interesting right now, the last 6 months, as the markets have shifted,
Right.
We're trying to set the expectations with our investors that the hold periods may be longer. Doubling your money in 24 months may not be the norm going forward. But we're well prepared. We make sure these deals are structured with a lot of good reserves. We stress test them. That said, the first deal I went in on as a limited partner, my wife and I put money in with an operator based out of Dallas, buying a property a couple hours south of Houston. So that put us right on the Gulf Coast, and it went horribly. We were supposed to be in that deal for a year. That was 5.5 years ago, and we're still in that deal. So I get to sit in that investor seat as here's how a deal has gone wrong. It's frustrating. Our capital has been locked up in that one. We're still earning supposedly we're still earning our accrued preferred returns. But I could have put that money to so much better use, or how the market has performed in those last 5 years and other better deals. And so I've experienced it from that side. And what I learned from that was I don't want new development. I learned how to vet an operator more. I don't want to be right on a Gulf Coast that gets hit by hurricanes every few years. Those are all the things that went wrong. The zoning and the permitting, the processes that were supposed to be done on that property were done incorrectly. So again, I learned a lot what not to do, and having that experience as an investor has served me well as I'm talking to my investors. And so far, so good. So the deals we've been in have done well, and I think that has come from my personal experience and learning really how to vet a deal, a property, in a market.
Yeah, absolutely. And so tell me a little bit about how you guys handle, because things happen in deals, right? Hurricanes,
Sure.
like something that's just totally outside the operator's control, right? How has the operator handled that? And has it made your confidence waver, or is it strengthen your confidence in the operator? Or what are some things that operators can do if a deal goes south from an investor standpoint, right? Or a syndicator standpoint that's like, hey, you need to be doing X, Y, and Z when things go south in order to maintain and save face.
Right. And on that operator that I was just discussing, I don't feel like they handled it well. The communication has been poor. How I would want an operator to handle it, and how I expect my operators that I partner with to handle things going not according to plan. Communicate. We're all big boys and girls. We all understand, like you said, things happen. Most people that are investing with us, they have experienced things not going as according to plan. And so if we are just upfront with them, hey, this is taking longer. Hey, the 300 cabinets we need to do these renovations, all those, the supply chains have been disrupted. We're all dealing with that right now. Communicate. And so that's one thing we demand from our operator partners, is that we're sending out monthly updates on how that property is going. the deal that went south for me, that we're lucky to hear from them once a quarter, and the only thing they do is a live webinar with that's on their times, their scheduled time, and I can hardly ever, my wife and I can hardly ever make that call, and then we don't get a recording of it afterwards, and so it's frustrating. And so the communications is huge. And then planning for those things that can go wrong. Of course, these are, we're buying a building right now in Florida where they just got hammered by a hurricane a couple of weeks ago.
Right.
But it didn't scare us away. The property sustained very little damage, but we know it's going to be well insured. The proper drainage elements are put in place. And when you've got it insured like that, if you don't want to be disrupted, your business operations to be disrupted with the proper insurance, if it does, it's not that big of a deal as far as the returns of that property. And so it's just communicating, here are the surprises, here's how we're handling it, and here's what you can expect going forward, and communicating that on a timely basis that the investors can access in a preferred communication channel that works for them is huge.
Awesome. Yeah, I think that's super good advice for any operator out there right now who's maybe, going through some struggles or whatever, right?
Right.
The communication is big time.
Right. And if they were planning to refinance this year, and all of a sudden rates have doubled, tripled, and then that's not, that's no longer part of the plan. All right. We all get it. What happened the last 6 months is, we've all wondered, when's the crash coming for years.
Yeah.
But it did still feel like, man, that came on suddenly.
Yeah, it was weird the way it happened. I think that's why.
Right.
So tell me a little bit about how you guys raise capital with 1031 money.
So it's interesting. So we're working with syndications, and which means you've got a group of 25, 30, 40 individuals coming together to do a deal with an operator. And there's a lot of paperwork involved. The private placement memorandums that are drawn up by securities attorneys. And so it makes it a little challenging to take that model and make it available to 1031 money for the typical retail investor with a little bit of cash. And so generally it is possible, but the operators generally put in a pretty significant minimum investment amount, because for them to take in that 1031 money, they have to do a separate set of agreements with the securities attorneys. And so it is pretty expensive. And so generally, by and large, what I see out in the marketplace is the operators put in a minimum investment of amount of $1 million to accept 1031 dollars. We have a couple operators we work with that we've been able to have agreed to let us bring in $500,000 of 1031 exchange money. And so, but that's the lowest I've seen. So it is a hurdle that, so if somebody has quite a bit of money from a 1031 exchange, a syndication may be an appropriate fit for them. And once you have that money with the operator, every time an operator sells a deal, they're looking for a 1031 opportunity. And so once you've placed that money with that operator, and then you're liking how that's going, that deal sells, they're going to go buy another property and have that lined up to be able to do that within the appropriate timeline. It's pretty easy from there going forward if you leave that money with that operator. But you're going to be kind of locked into that operator going forward to continue just kicking the capital gains tax down the road via 1031s. So once you're in with the operator, it's pretty easy. Even that, for the typical retail folks who bring in a $50,000 minimum investment for that first deal, and they like it, they want to keep it going, those folks can 1031 into the next deal because they're already with that operator. But bringing new, fresh 1031 dollars into a syndication, that's where you're going to get those high minimum thresholds. And so it can be a challenge for some folks. So anyway, that's a little bit of a convoluted answer, but it is possible. And then going forward, it's fairly easy at that point.
So what's your biggest frustration with the 1031?
Paperwork, right? Timelines. You've got these tight timelines. We just had an operator sell a property in Austin 2 months ago. I guess it's coming up on 4 months ago. We were hoping to, like every deal, we were hoping to be able to 1031 investors into the next deal.
Of course.
And just given the market, we were not able to find a deal on time. And so we've had to return all that capital to the investors. Now we're all subject to the capital gains tax. It is a matter of timeline, being able to identify a deal quickly enough, in not knowing what the future market is going to be like. We didn't want to go out there and buy a deal just to avoid taxes. It has to make, the deal has to make sense. And unfortunately, that operator wasn't able to make that happen in a really strange, still frothy Austin market.
Yeah. And I think that's like one of the biggest things that, you kind of run into with 1031s is that tight timelines, those asset, like kind constraints, those restrictions. And then like you said, the paperwork is big time. And that's why
Right.
we really, we love 1031s. Like when 1031s make sense, like go for it. Like for sure. They work really, really well for, upgrading and upscaling your business. But when you get to the point to where you, like you just said, when you're a motivated buyer, because you don't want to, like, that was a really wise move. Don't buy something because, the tax implications are coming in just because you need
Right.
to buy something. Like, you do not want to be in that position.
Right.
And they literally target those people. You know this from real estate, right? They target people in 1031s like, hey, like, come buy this deal that's way overpriced because,
Exactly.
it's you're going to lose your money. So and that's why we really tote the deferred sales trust. I don't know if we've talked about the deferred sales trust or not, but for those of you who don't know, a deferred sales trust is an alternative to 1031. It works not only with commercial real estate or investment real estate, but it works for primary homes. It works for businesses. It works for stock. It works for crypto. We're doing a deal right now with a racehorse, actually.
Really?
So it's
Wow.
any highly appreciated asset. And what's unique about it is it's a totally different IRC code. So it's not 1031. It's actually 453. It's a seller carryback at its core, but it allows you to sell the asset, diversify into multiple different asset classes. There's no time constraints going into real estate. There's no 45 days to identify, 180 days to close. And there's no having to go from the same asset to the same asset. So you could sell a business and go into stocks and bonds and just, even a 10-year treasury yield if you wanted to right now, right? Like just kind of chill. You go into other currencies. You could go into crypto or businesses or whatever. It doesn't
Right.
matter. And then when the time's right, you can hop back in and out of real estate. What's nice for syndicators is that when you do that, like you were talking about, right? Like how many millions of dollars do you think you've left on the table because you don't want to take 1031 dollars under $1 million?
Right. Yeah. It's quite a bit.
Yeah, it's gotta be high because, and then you're
Right.
dealing with 50, amounts of 50,000, 100,000, 150 to 200, right? Which no small amounts, right? But when you start bringing it in, I mean, imagine if you could just like, hey, here's $5 million, like for a syndication. Here's $10 million for a syndication. We just dropped, I think, 10 million on a couple funds last like 3 months
Okay.
from people that had DSTs. So it's a super powerful strategy for anything that's highly appreciated that you're liquidating. So if you guys are interested in learning more about that, go to capitalgainstaxsolutions.com. And we have a free mastermind every Friday at 10 a.m. Pacific, 1 p.m. Eastern. Come check it out. Bring your CPAs, bring your financial advisors, your real estate brokers, all those people. It's a fantastic thing. And Brad, I think I already actually invited you.
Fantastic. And it sounds,
Yeah.
I know not just enough to be dangerous. I
Right.
learned of DSTs just maybe a year and a half ago. And the fact that you're talking about removing those timelines, removing the like kind requirements, removing yourself as a motivated buyer
Right.
is so huge. And we talk about it on the seller side. Oh, hey, that's 1031 money. So we know we've got them. Once you're on the seller, if you're on the seller side and you realize this is 1031 money coming from the buyer, right? It's blood in the water, right? Because
Yep.
they're under a timeline crunch to get a deal done. And that's a horrible position to be in as a buyer. So removing those constraints that you're talking about is massive.
Yeah, it's pretty huge. So, all right, Brad, well, we're coming up on our time here. Thank you so much for coming on. I really appreciate it. Thanks for
Thank
all
you.
the wisdom you shared. Be sure to check out that mastermind group, guys, every Friday, 10 a.m. Pacific, 1 p.m. Eastern. That's capitalgainstaxsolutions.com. And Brad, where can people find you?
Best place to connect with me is on our website, sugarhouseinvestments.com. That's where you can learn a little bit about us, get on our investor database email list so you can see the deals that we put out there, the results that we're able to deliver, and just on hanging out on a daily basis. I love hanging out on Twitter. The number of active real estate conversations going on there on a daily basis is actually really remarkable. So I'm at Brad Shep on Twitter. So feel free to connect with me there as well.
Okay, so sugarhouseinvestments.com, and then hit up Brad on Twitter at Brad Shep, BRADSHEP. Awesome. Any parting words?
I again just appreciate the opportunity to jump on here. For me, I'm a big fan of syndications in the sense of they give me my time freedom back.
Right.
We work a lot with the tired landlords, busy, successful professional service providers, small business owners. So folks that love the idea of the advantages of real estate ownership, but don't like the hassle of daily management. Definitely be sure to learn more about syndications. I'm happy to spend time with folks to educate them about the ins and outs of it and how you can own real estate without giving up your life to it.
Yeah,
so
absolutely.
Happy to have those conversations.
Awesome, guys. Make sure to go check out sugarhouseinvestments.com. Brad Shep on Twitter. Thanks so much for coming on, Brad.
Yeah, thank you.
And thanks so much, everybody, for listening to another episode of the Capital Gains Tax Solution Podcast. As always, not having a clear plan is the enemy. Using a proven tax deferral strategy such as the Deferred Sales Trust, 1031 exchange, and putting your money into passive real estate syndicators, with good operators is the best way to create, preserve, and grow your wealth. Please rate, review, subscribe. Thank you guys so much. We'll catch you on the next one. See ya.